Hello, how you doing? It's Gus Tucker, and welcome to Financial Freedom Friday. And how are you doing? Hopefully, you're having a good week, and it's good to see you. Yes. So, hey, like and subscribe to the channel, share it with other folks, and let's uh, let's get into it. Today, we're going to be talking about we're going to talk about this for probably the next couple of weeks, and this is a time for you to really take stock of your financial situation and your patterns and habits. And I'm working with a good friend of mine who is, okay, I'm just going to tell you, okay. I have three adult children, okay? And I love them, they love me. But if you have parents, man, you not always listen to your parents. And it doesn't matter if it's in the profession they're in or not. So my kids, they listen to me. They're adults. They listen to me. They're all doing well in life. But I brought in a friend of mine who also works in this industry in a different capacity to kind of have some conversations with them. And I'm plugged into it. I mean, I have all their financial information. I'm working with them on all their stuff. But some conversations they need to have with somebody else. You know what I'm saying? So maybe I could be that person for you and have the conversations that you need to have. Because here's the bottom line. What I'm about to share with you is true for you. It doesn't matter who you are or how much money you make. Whether you're Elon Musk or Bill Gates, you're doing the same things we're going to be talking about tonight to be wealthy. And if you're not wealthy, you're doing the things that we're going to talk about that don't create wealth for you. Okay? So let's get to it. So what you see is from where you set. Perspective makes all the difference. Look, it doesn't matter what profession you're in, your mindset, your point of view, the place you take up to look at life from makes all the difference. How you see things make all the difference. So be careful in terms of the take that you have or the perspective that you take on your life and living. Okay. The vantage point that I come from is a biblical one. Okay. Everybody's got their worldview. They've got how they see things. Got it. And everybody's got to choose one. Okay. But I believe seeing your life from God's perspective is the best and only vantage point. He's called us to be fruitful, multiply, fill the earth, subdue it, and rule over it, and to do it according to his principles. The principles I'm going to share with you, while you won't see any Bible scriptures, it's laced with Bible truth. Because if you want to have wealth, you have to do what the wealthy do. And to do what the wealthy do, you got to be them in your thinking. So we're going to talk about some of those thinking processes tonight. Okay, now, I told you guys this is the year of the Lord's favor. See, I've got this. You can't probably see this, but this is from our church. It talks about the year of the Lord's favor. It's little stickers. I've got them all over the place to remind me of what Jesus said. He says, the Spirit of the Lord is upon me, and he has anointed me to be hope for the poor, healing for the brokenhearted, and new eyes for the blind, and to preach to prisoners. You are set free. I've come to share the message of Jubilee, for the time of God's great acceptance has begun, the year of his Lord's favor. Jubilee was a time when people were released from all their debts. Property they had to sell is returned back to them. Okay? And it's a time of prosperity and wealth. And Jesus was saying, that's the time that is right now if you're applying the right principles. Okay? So I want to share with you some things that can put you into favor. Okay. First, the basics of financial management. Sorry, I should have checked that headline. But it says there are 4 quadrants that you can make money from. The first is the employee quadrant. That's where you trade hours for dollars. Either you have a salary of some point or they pay you per hour or something like that. But that's limited by the value they put on the job, the number of hours you can work, It's a fixed income. In self-employed, it's pretty much the same way, because in self-employed, you just own the job. You are the job. If you don't do the work, work doesn't get done. Okay, what's a business owner? A business owner has two things that the employee and the self-employed don't have. They've got a team and a system. The system means save yourself time, energy, and money. There's a marketing department, a sales department. There's accounting, there's finance, there's quality control, there's human resources, there's the executive piece, there's public relations and marketing and sales. And the owner sits atop that, and all these people have jobs, and the output that they're doing that creates the business owner's lifestyle. So he's got a team and a system. And ultimately, that's where all of you want to be on some level, is to be a business owner and have a team and a system. Investors know how to examine and understand whether or not someone's a good business owner, and then they invest in those businesses because they're going to get a good return. If they see a business owner knows how to run a team and has a tight system, then they'll invest in that business. It's a simplified concept, but essentially that's what it is. Okay, now let's talk about making money, because the purpose of those four quadrants is to make money. And there's three ways you can make money. The poor and the middle class go to a job and make earned income. They exchange their time for money. That's what the poor and the middle class do. They exchange time for money. The next kind of income is called portfolio income. Like you invest in the stock market, or you invest in some kind of investment. You put a certain amount of money in, it grows over time, and you take that money out, you sell the investment, and you make what's called a capital gains. That's portfolio income. The income wasn't made directly by work that you did, but it was done based on knowledge that you had about buying an investment at a certain price, seeing that investment go up in value, selling it or selling a part of it, and then developing income. That's portfolio income. The third kind of income is passive income. It's where you don't have a job, you don't get a paycheck, but you have assets that throw off cash to you. You've invested your money into different kinds of assets that make you money, and we're going to talk about that. Okay? Three kinds of income. Financial statements. Okay. Each one of you is running a business. Did you know that? You're running a business, and it's your last name incorporated. Whatever your last name incorporated is your business. So I'm Gus Tucker. It's Tucker Incorporated. I've got an income statement and a balance sheet. An income statement is income minus expenses equals profit. That's kind of, is your operation making you money? Is your operation making you money? Yes or no? The balance sheet is assets and liabilities. What you own versus what you owe, is it growing in value over time? Are your assets outgrowing your liabilities over time? So are you building a valuable enterprise? Okay, now your family is that enterprise. Whether you own the business or not, do these financial statements. And we're going to talk to you about how to begin looking at that. Okay? So, financial statements, your income. What are your income sources? W-2, that's a job. 1099, a business. A 1099, it should be interest. 1099 interest from investments. Rental income or passive income. What are all your income sources right now? We need to be tracking that. Are you using any kind of software? Are you using any kind of software, any kind of digital system to track your financials that's plugged into your bank accounts, investment accounts, etc., that's tracking your investments? Okay? Then your expenses, taxes, which is your biggest expense, your home mortgage, school loans, car payments, credit cards, retail debt, investment real estate, the mortgage on that, business liabilities, bank loans. These are payments you got to make. So are you running an income statement? Every month, every year, are you profitable? So if you look at your income minus expenses every month, is there a margin in there? Income minus expenses, is there a margin? Because that margin is what you can begin to save and invest. Do you have an income statement that you look at on a regular basis? My wife and I have a system so we know on a weekly basis what our expenses are, what our income is, and projected income. So we know by week what's going on, and then there's a plan for every dollar. Then your balance sheets, your assets minus your liabilities, your net worth. And you want to review this minimally on an annual basis. What are assets, things you own, savings, stocks, mutual funds, CDs, bonds, real estate, businesses, government securities, intellectual property, and other investments? What are your liabilities, things you owe, mortgages, loans, credit cards, debt, business liabilities, bank loans, personal loans? So assets minus liabilities is your net worth. Are you tracking these things? So are you tracking your income statement? This is living every month. That's what you feel when you're month to month, the way you're living month to month or paycheck to paycheck. Is there margin left over? You can only be in one of three places. Income is greater than expenses, equal to expenses, or less than expenses. Where are you at? And what are you doing with that margin? And what are you doing to increase that margin to hit your financial goals down the road? Okay? Now, so we talked about the basic financial statements review at least one time a year. Income minus expenses is your profit. And your profit is your level of savings and investments. How much money is in your savings right now or your investment accounts right now? If you looked at that, savings and investments versus how much money came in, that's your profit margin. What's the profit margin for your business? You want it to be minimally 30%. Minimally 30%. You want to get it up to 50, but minimally you want it to be 30%. Okay, your balance sheets, your assets minus your liabilities, what you own minus what you owe. And it's the value of that going over time. What does that mean? That means the things that you're investing in are getting more valuable over time. Okay? Now, here's the cash flow pattern of the poor. Now, I'm not going to tell you, but what do you think the poor think their money is for? Because what this is their money comes in income, and then what happens to it right away? It just goes out. Money comes in and the money goes out. The money comes in and the money goes out. It doesn't acquire assets or liabilities. So the poor, what they think money is for paying bills. Because I make money, I pay my bills, and I'm able to live, and that's it. The poor think money is for paying bills. Is that you? Your money comes in and it goes out. I want you to start tracking this so you can see, what is my cash flow pattern? This isn't what you think it is what it actually is by looking at the numbers. It's a reality check. It really is. It's a reality check. Cash flow pattern of the middle class. What do the middle class think money is for? Well, let's look at it. Okay. They get their money, and then they have liabilities. What are liabilities? They're basically payments on things that don't increase in value. Or if they do increase in value, they don't put cash flow in your pocket on a monthly basis. For instance, the house you live in is an asset. It may be increasing in value, but to get the value out, you'd have to take out a cash out refinance or home equity line of credit. right? But then what happens? Your liability just went up. So it's a liability, it's not an asset. So the middle class, they buy liabilities primarily with their money. A little bit of their money goes through the asset part. You see that? But that big round circle, that white dot is settled in the assets. That's where it really is. The line going through assets means a little trickle. A trickle happens into assets. They got some savings. They may have a little bit of money in their 401k or investment portfolio or something like that, but not a lot. So the focus of the middle class is they need money for buying stuff. They need money for buying nice stuff. Money, it basically goes into liabilities, a little bit trickles into assets, but no wealth is accumulated. But they got a lot of nice stuff. They got a nice car, nice house, nice clothes, nice everything. They're well groomed. They're going to the Super Bowl, all this kind of stuff. But are they accumulating wealth? Usually not. Their money goes to fund their liabilities. As we used to say, they look good, they smell good, and they're broke. Okay? Is that you? I don't know. This isn't an indictment on your character, or is it saying anything about the kind of person you are? All we're looking at is the cash flow pattern of your money. Super Bowl is next week. And one of the things that's real important is the communication between the quarterback and their receivers. And one of the reasons why one of the most productive quarterback to receiver combinations in the history of football is Patrick Mahomes and Travis Kelce. Why is that? Because they see the game the same way and they make adjustments together, even on the fly. And Patrick Mahomes can throw the ball before Travis Kelce gets there. And he always shows up where the ball is. Because their patterns are successful. Running a route as a receiver in football is a pattern. Your pattern is successful. And so what we're talking about here are cash flow patterns. We're just looking at your patterns. We're not looking at your character. Travis Kelce as a person, I don't know what kind of person he is, or Patrick Mahomes, that's totally different than who they are as a football player and the patterns they have. So this isn't judgmental on you as a person or your character or your value. This is just saying, this is your cash flow pattern. This is what you do with money. That's all it's saying. Okay? Now, the cash flow patterns of the rich. Now, do they have expenses? Yes. Do they have liabilities? Yes. But primarily what they do with their money is buying assets. Their money's buying assets. What are assets? Things that put money in their pocket. Investments that grow in value. Businesses that grow in value. Real estate that grows in value. Intellectual property that grows in value. I made a patent. I made a song. I wrote a book. And it's continuing to pay me. The wealthy, they think money is for making more money. The purposes of my money is to make more money. Do they have liabilities? Do they have expenses? Sure. But what they're about is gaining interest, building equity, and growth. Money is for making more money. Money is for making more money. Got it? 3 cash flow patterns. The poor, money's for paying bills. And most of their money goes in and goes out in expenses. The middle class, money is for buying nice stuff. As my mother used to say, that money burned a hole in your pocket. You got to go spend it on something. The wealthy are willing to put their money into investments And they may not get it today or tomorrow. It might be months or years down the road, but they're building value over time. Okay? Now, what does this look like? Taking stock of your pattern. So your income comes in, and look at this. How much are you giving? Wait a minute. What's that got to do with me being wealthy? Well, the person that gives understands that really they don't own anything. God owns it all. And by giving, they're recognizing that, and God's favor will be on them. And they'll seem to get lucky a lot, or everything they have turns to gold. Why? Because the person in control of everything gives them favor. Giving recognizes that you don't own everything. And the purpose of you having is just not for you, but it's for also meeting the needs of other people. Now, I want you to look at these two numbers every month. Okay? And then look at annually. How much money is going into savings? How many months worth of your living expenses do you have in savings right now? And are you comfortable with that number? And what's happening to your investment number every month, every year? Is it going up? You want to look at these things because these are the things that you want to be going up. What you're giving away to others, what you're saving in your investment accounts, and the value of your investments. While you're decreasing these, bad debt. What do I mean by bad debt? Debt that's on depreciating items. Now, I know wealthy people. I know wealthy people that rather than paying for like a car cash, they'll get a loan at a couple percent. My wife and I were talking about this today as we're coming back home from church. You'll get a car loan for a couple percent. How do they do that? Because their credit's real good and they have a lot of money. The bank knows they don't need the money, so they're willing to loan it to them at a low interest rate. But their investments are making them 10, 15, 20, 25%. So rather than take this chunk of money and pay cash for something and take that money out of their investment system. So let's say they had 100 grand and it was making them 20% a year. That's 20 grand. But if they get this car for $100,000 and the interest is 2%, that's 2 grand a year. So I'm going to take money that I can make 20 grand with to pay off a car that's costing me $2,000 in interest. No, I'm going to take the money from the investment, pay off the car, and have 18 grand left. You see what I'm saying? That's the concept. So what's happening with your giving, savings, investments? What's happening with your debt and expenses? Do you know? Do you track it? Do you look at it? If not, let's start now. Let's start now, okay? Now, to finish up, what is your current cash flow pattern? I want to hear from you guys. I want you to be honest, okay? I want you to be honest. My website's on the screen. You can hit me up there. You can send me a message, text me, email me. All that's on my site. Let me know. Hey, Gus, this is my cash flow pattern. I want to change it. I want to make it better. What do you desire to be your cash flow pattern? Wherever you're at is where you're at. Okay, it doesn't have to stay there. What do you want to be your cash flow pattern going forward? Okay. Are you willing to make the changes necessary to change your pattern? Here's what's going to require you to do. 1, be transparent. And that's one of the really, really good things about my family and myself. We're transparent about where we're at. We're not perfect, but here's where we're at. We're transparent about it. And then we're being challenged to make changes so we can get better going forward. I'm not where I want to be either. I got to make changes. Are you willing to make the changes necessary to change your pattern? And when are you willing to start? It's interesting. Diets always start next Monday. Or changing some habit always starts next Monday. If it's good, why not start it right now? not next Monday, okay? When are you willing to start? So let me know. Say, hey, Gus, I'm willing to start now. And we can get you going. We can get you looking at your current cash flow pattern right now. What is it? Because you've got one. It's either cash flow of the poor, the middle class, or the wealthy. And no matter which one it is, you can improve it and make it better. Are you willing to do the work to make that happen? If you are, check in with us. Let us know, and we can work with you to make that happen. Okay? Because I want each one of you to have a cash flow pattern of the wealthy and to accumulate wealth over time and build it for multiple generations. Okay, guys, look, like, subscribe, share. Let me know whether this is helping you or not helping you, good, bad, or indifferent. Let me know. If there are other things you want to talk about, let us know, okay? And we can make those happen. All right, you guys have a great evening. It was good chatting with you. It's Gus Tucker here at Financial Freedom Fridays. Man, have a great week and weekend. Take care. God bless. Bye-bye.